Cool. All right. So doing this video to just talk about what you and I've worked on over the last couple of years and my frustration with the lack of information that I was getting from different accounting sources and different accountants. And I want to preface this by, this isn't exact financial advice or anything like that. This is just what we've come up with as a really good way to track the KPIs in my company and make sure that our cash flow is good, make sure that we're hitting our minimums, and make sure that we're on track for our net profit for the end of the year. And I don't want to bash accountants or anything, and this might have been a lack of understanding on my part of what I needed and how to ask for what I needed. But you know, over the last 2 years, it's taken you and I both a lot of time and effort to pare this down, get our chart of accounts where it needed to be so that we can, and QuickBooks, so that we could
Yeah.
take everything from that and then create this report. What do you think the biggest challenge in the QuickBooks was for us to actually be able to pull the information out of there and get this report done?
Yeah, I think the biggest problem was really getting the accountant to understand what the perspective is that we're trying to accomplish, and then actually getting them to be willing to implement those steps as well. I think that their point of view is more so, hey, what does the IRS want to see when tax time comes, versus what information do you need to see to make good decisions every single month with the information that they're sending you.
Right.
So I think that was the biggest thing, you know?
Yeah, and oftentimes those two things are different, right? I mean, obviously, from a tax perspective, we want things to look like the company's not making as much money, and we want to, for a lack of a better term, we want to try to bury some of our expenses in the company as business owners so that it doesn't come back to us on a personal tax return.
For sure.
So because of that, it can kind of convolute the numbers sometime. And so I'm going to show the report that we came up with. No, it's not going to show it. Okay. So basically, this report is the KPI results, the cash flow, and then the break even analysis. The financial statement summary, I'll let you explain that and how we use that, and
Sure.
then the KPIs. But for for the purposes of other contractors, maybe simplifying this for them, one of the challenges that I had, and this is just a fictitious report from another company, but we're using it as an example. So um, the profitability, first thing we did is we wanted to look at what our total revenue, and this is cash hit in the bank account, correct?
Correct.
Okay, so this is just cash that's hit the bank, has hit the bank account versus the current year versus the previous year.
Yeah.
Then what we want to look at is we want to look at our overall profit margin on projects. So if we have a project that's $100,000, essentially what this is saying is $33,000 of that should have been gross profit that goes to the company after all the expenses were paid on the project, correct?
Yes, that's correct.
Okay. So if we're selling at a 33% margin, that means that means that we want to make sure we have that margin broken down into the categories that are useful for me. And these were the three categories that were useful for me. I have a sales team, so we pay commissions. We have our operating expenses, and then we have our seller discretionary earnings, which I don't want to get too far into that, but basically that's the profit that the company realizes that me as the owner has to spend, either taking profit in my pocket or money that I can spend inside the company after everything's been paid, right?
Yeah, that's correct. And one thing I want to note as well, so right now you're walking through the results column. The target column is really showing exactly what margins we should be hitting. So in this case, the commissions, although we have it broken down, showing a 10% commission overall is what we're hitting, trying to hit for our target. That's included in this particular company as part of the cost of goods sold as well. So we're looking for a 23% margin after gross profit. Sorry, after COGS, and that 23% will be broken down into fixed expenses, 13%, and seller's discretionary earnings, 10%.
Which, yeah, which would be the profit. So
Yeah.
why is this particularly useful?
Yeah, mostly I'll say there's a few reasons really, but one very important one is that a lot of business owners don't even know what model they have, right? They couldn't jot down on a piece of paper these margins that we just laid out. So step one is it's very important for them to make sure that they have it, it's laid out for them, they know exactly what should be happening in their business. The second thing is now being able to track and measure, are you actually accomplishing what's supposed to be happening in a business? And then finally, it's being able to figure out, okay, if you're not accomplishing it, why not? If you are accomplishing it, is there anything you could do to improve those numbers if you wanted to hit a different target or something like that? But knowing the numbers, seeing performance against those numbers, and then troubleshooting is why I would say it's very important.
Gotcha. And for me, you and I work together doing mine, and we figured out that, 10 in this industry in construction, 10% net profit or SDE, which, just for everybody, the seller discretionary earnings is if you're going to sell your company, then that's one of the numbers that whoever's going to potentially acquire you is going to look at in terms of the profitability of the company,
For sure.
right? Okay. So for us, we found that in the construction industry, 7 to 10% was really a healthy net profit. So that's where that number came from. And, the breakdown of the margin. So let's use 33% for an example.
Mm-hmm.
You have a sales team, 10% of that's going to go to the sales team. We know that 10% is a healthy profit margin for the company. And so therefore, we knew that we had to keep those operating expenses in that 10 to 13%. If we go over 13%, now we know that we're overspending. So
Yeah.
that's kind of the breakdown on that. And then this SDE target, can you explain to us maybe why that's an important thing to take a look at, and how that's useful?
Yeah, for sure. So what we're looking at here in this little graph is what we're trying to illustrate is, okay, we know what SDE is year to date, and what might that be through the end of the year. That's what we're illustrating with this graph. And the way that we're accomplishing that is by setting up a budget for the company. So we have targets. These are the numbers we're trying to hit. Then in this particular illustration, we have a budget, which is, hey, at minimum, what should we hit to keep this company going healthy? So using those budget numbers, which is kind of like our minimums that we need to hit from a revenue perspective, trickling all of that down through what our business model should be, right? The 13% to operating expenses, the 10% to SDE. We basically know as long as we hit our revenue goal, we know what our profit margin is going to be. As long as we keep our expenses, our fixed operating expenses within a certain budget, then we can predict what SDE should be on any given month. And what we're illustrating here is, this company continuing to hit that those numbers every single month for the end of the year. If that is accomplished, then I can't see it right now. It looks a little tiny on my screen, forgive me. But we're on track to do about $2 million in this illustration, right? From where we're at today. So we're basically projecting forward based off of the minimums that we know we need to hit.
Okay, cool. All right, so let's talk about this cash flow page and then the break even analysis, and really what this cash flow page does for us and why it's useful.
Yeah, absolutely. So definitely knowing cash on hand is super important. I imagine that most businesses they probably log into their bank account and can see that. So it's just helpful to have it all on one page, I think, from that front. But now jumping into actual like the cash flow, the revenue numbers, and everything like that. One of the biggest issues that I think business owners have with the cash flow in particular is that when they think about their financial statements, the only document that they're familiar with or they may be receiving from their accountants is the profit and loss statement. The profit and loss statement basically says what you've earned minus your expenses. This is the net income, right? That does not say where your money is going. So, for example, if you end up paying down loans or withdrawing money out of the account, just taking a distribution from the business, none of that really shows up. So you really wouldn't, and your accounts receivable, accounts payable, all of that stuff may affect your actual cash flow, money you're going to have in the bank. None of that gets reflected on a profit and loss statement. So here with this cash flow statement, just walking through it really quickly, high level, you have your revenue, you have your cost of goods sold, you have your expenses. That's all in a P&L. But now we could look at how your the company's accounts payable is changing over time, right? We can look at how current liabilities are changing over time and accounts receivable. So now when we look at revenue being high, in this case, we're looking at a cash-based business. So we're looking at revenue being determined when the money gets deposited. How do we know if money is being deposited because of new sales versus money that's being deposited because of outstanding accounts receivable that have been collected? Being able to track those changes over time in accounts receivable and accounts payable and everything like that really helps us understand the health of the company because we could see where the money's coming from, right? Where's the revenue that we're seeing coming from? Is it coming from sales or not? But we could also see, well, how is our accounts payable doing, right? Do we have enough cash on hand to cover our accounts payable when it comes up, or are we going to be running into a tight cash flow issue? In this particular case, we can look at what amount of cash the business is generating, which is reflected in the operating cash flow. So we can see that this business, just from operations, is generating about $939,000, right? That money could then be used to purchase assets for the company or whatever the case may be. That's being reflected there for the free cash flow. And then finally, we have net cash flow, which if you could scroll down a little bit for me to the just to the bottom of this page here. There we go. For your net cash flow, that's basically reflecting the change in your cash on hand for whatever period we want to select, minus whatever change in debt, right? So what debt has been repaid in that period of time as well. And that's basically showing the net cash flow after debt repayments and everything else as well. So generally speaking, I think this page just helps understand the health of the company. Where's the money going?
Okay. And if I were looking at this, so from a business owner, if I'm looking at this and I see that for the month of June, which let's just say this is based off the month of June, if I see that I have operating cash flow, I know that this is what's hit my bank account, and I have this amount of money basically total to pay whatever was due that month to my vendors, whatever was due that month for salaries and bills and commissions and all of that stuff. And then whatever's going to be left is what I, as the company owner, have to spend in the business.
Yes,
Okay. And then we take a look at this over a 3 month period, over a 4 month period, and we make a determination of, do we have enough cash flow based on not only historical data, but what our accounts payable are and what we know to be our fixed expenses, all of that stuff. We'll be able to look and see, is the business healthy, or do we have a cash flow issue?
for sure. 100%. Yes.
Okay, gotcha. So this break-even analysis, which I want to scroll back up here really quickly, just so you guys know, this number right here is a little high, and we realized it's a little high. So some of these numbers are going to be a little bit inflated. So if you're watching this and your business doesn't have 121.8% increase on your net profit, don't worry about it, okay? It's because that's not typical. All right.
Yes. For
All right, so let's look at the break-even analysis and how do we use this?
Yeah, for sure. So this page here, what it's doing is tracking, I would say it's tracking the margin of safety over time. That's the best way to put it. But couple things. One, every company should know what they need to make in revenue for their business model to work. So every company should just know what their static break-even analysis is. How many jobs do I need to sell, especially for a roofing company? How many jobs do I need to sell each month to keep the lights on? And then more importantly, after that, how many jobs do I need to sell to make this business worthwhile, right? For me to continue running it. So what this is tracking over time for any company, this is the year to date number. It's basically showing that over this year so far, this actually, if you can scroll up a little bit, just a tad, so I could show what that 3.2 number is. That $3.2 million number is basically showing our margin of safety. What that number is the amount of revenue we have in excess of the number we need just to keep the lights on, right? So this is just another measure of health. We so far year to date, we're running a business that basically has $3 million more than it needs to keep the lights on, right? Which I think everybody would be happy with.
Yeah, so if you break this down just by one particular month, so let's say for an example, we did this over last year, okay? And so we had this data for every single month in 2023.
Mhm.
We could pull that out. We could basically pull that out and say, hey, listen, for the month of July, this is what you did last year. Here's your fixed cost. Here are your minimums. Here's what you need to sell in July to keep to keep the lights on, basically.
For sure.
Right.
Yes.
So we've figured out what our minimum gross revenue is, and we figured out what our minimum net, or I'm sorry, gross profit is, so that we could just break even and pay our bills. Um, we know that number. If everything's on the status quo, meaning everything stays exactly the same, then as a business owner, I know that I can't put any more expenses into the business unless I have a good, healthy margin of safety number, correct?
Absolutely. Yes, that's correct.
Okay. So if year to date right now we were sitting at $2.5 million, we'd have to have a conversation about like, hey, listen, we got to figure something out for you to continue to be able to operate because you're literally just breaking even.
Exactly. Yeah, that's exactly the type of conversation you would have to have, right? Where do we cut expenses or what do we do to increase revenue ASAP?
Right. Okay. So if somebody wanted a report like this generated for them, what would they need to do? But let's just say they were going to work with you. What would they need to come to you with in order for you to be able to create a report for them that way on a monthly basis? So, like you and I meet on a monthly basis,
Yes.
generally in the middle of the month, and we go over the prior month just to make sure we know what's going on with the numbers, what the trends look like, and if we need to have a hard conversation where there's some areas where we need to cut. Obviously, on this financial report, everything's in the positive.
Yes.
What would somebody need to bring to you in order to be able to create something like this so they could get a snapshot of the health of their business?
Yeah, so the basic things would be you would need access to QuickBooks Online. This my system is integrating directly with QuickBooks Online. It does integrate with some other accounting softwares as well, but honestly, I'm familiar with QuickBooks Online. We are very efficient with it. We have a team that works with it. So QuickBooks Online. And then the second thing would be honestly an accountant that's willing to make sure that they have accurate data for you, and that they get it done in a reasonable amount of time every single month, right? So you definitely can't do without those two things. I don't step in to fulfill the role of accountant or bookkeeping or anything like that. I work alongside them to make sure that they understand what we're trying to accomplish and that they could ultimately get the reports and everything entered into QuickBooks in a way that's suitable for the information that you're going to be looking for. So as long as we could accomplish, you could come to me with those two things. That's great. And guess what? If you can't, we have an accounting team that we will be happy to connect you with that works with us on a regular basis, consistently knows exactly what we're looking for, so they could get you up and running in no time, you know?
So the way things are classified, which are called the charts of account. So the way things are classified, that matters.
Well, yeah, it most definitely matters, you know. That could, I mean, from a tax perspective, it may not make as much of a difference, right? But from you being able to understand what's happening in your business, it could absolutely matter. You know, if you have expenses that at any given time could show up under advertising over or truck expenses or boat expense or whatever, how would you know what you're spending on advertising versus what you're spending on something else? If you see that you're over budget but everything's miscategorized, then how would you know what you need to fix? You know, so for your reports to be useful, yeah, how it's categorized absolutely matters.
Right. And I think that was one of the biggest challenges for us. You know, you and I started digging into this in 2022, like really starting to dig into this in 2022. We figured out that the way that things were set up in QuickBooks wasn't necessarily the right way. And then we didn't actually even know what we were looking for. We knew what the end result was supposed to be. And then we had another accounting firm that we used for 2023, and they helped. I mean, they did help. Let's be fair. They helped um, organize some of the charts of accounts in ways that made a little bit more sense for us, but we still didn't have things classified exactly correct for my business structure, the way that I pay people, and how we
Exactly.
needed things to be classified. Uh, Not only from getting the data, but if we had to go back and track down, so let's say on this on this target, so on this KPI result, so on our target, we're at 13%. If we were much higher on the expense side, so meaning we were spending over 13%, we'd have to have a good way to go back and find where we're overspending.
Yeah.
Yeah. And if
Yeah.
we don't have things classified correctly, put in the right categories, it's going to be extremely difficult for us to track that down and make decisions as business owners on what we need to cut, or maybe we need to raise prices, or whatever we need to do to get us back to where that healthy percentage is. That would be a real problem if we didn't have them categorized correctly, right?
Yeah, for sure, definitely. And one plug I'll make for accountants as well, right? Because I think we as business owners do this, and I say we because I'm in the same boat sometimes, right? You know, you get your P&L statements, you get that spreadsheet that says, hey, look, we have these expenses that we weren't able to categorize, and we think, what difference does it make? I could see what my net income is. That's all I really cared about. This is one reason that the information you're highlighting right now, Corey, is one reason that you do want to respond to your accountant and say, hey, look, no, okay, this is the suspense account, or this is whatever the ask my accountant account. These are what these expenses are, and this is how it should be categorized. That's why that report matters, and it matters that you get back to the accountant with the information, you know, so that when problems like that happen, we don't have to spend a month, 2 months, or something like that trying to figure out the problem. We could know instantly, okay, this is what we need to do to make some adjustments.
Yeah. And that's really it. Like getting some quick, useful information for us, for me as a business owner to know, like, okay, we're on track, everything's good. As long as everything stays status quo, our profitability is good, we're where we need to be. And from an acquisition standpoint, if somebody's wanting to sell the company, you have to have this stuff in place, because there's no way for a potential buyer to really diagnose whether or not the business is healthy. And if you have a report that basically gives them a roadmap on what the totals are, what everything is, and then they can just go back and look and make sure everything matches on your QuickBooks, and then goes back to the bank account and make sure everything matches, you're golden.
Absolutely.
Yeah. So
Definitely.
yeah, we would get, or I would get these financial statement summaries, right? So I would get all of these, cost of goods sold and the assets and, our liabilities and our equity and all this, cash flow and all this. And I'd look at it and I'd be like, okay, cool. What the hell does it mean?
Yeah.
Right. I'm a contractor and not not a finance person. I'm not an accountant. I'm beginning to understand some of this because of the journey you and I have gone through the last couple of years.
Yeah.
And this is the least favorite thing of I hate it. I hate doing this. That's why, that's why these breakdowns and these metrics, these KPIs were so critical for me because I can set my mind at ease at the end of the month, looking at all this and saying, hey, look, we're on track. Everything looks good. Cool. I don't need to worry about it. As long as I don't go and spend a bunch of money or do something stupid, then I'm fine. The other
Yeah.
thing that I think this does is this gives me a little bit of comfort that if I have an unexpected expense, I know that I have the money to cover that. And then you
Yes.
and I can have a conversation halfway through the year or whatever, make sure that we're on track with our tax planning. That's a
Yeah.
huge one. Am
Yeah.
I contributing enough throughout the year to make sure that my taxes are covered and I don't get a huge tax bill at the end of the year?
Absolutely.
You'll be able to tell me, hey, listen, you need to buy some stuff, right? Like you have a bunch of cash, we need to figure out how to reduce your taxable income. And then I think from a even a more practical standpoint, um, I can have a conversation with you and be like, hey man, how much money can I take out of here
For
as
sure.
an owner? So I can, so I can actually realize the benefits of owning a company.
Yeah,
So
most definitely.
just doing this, I know it seems very simple, but it took us 2 years to get here.
Yeah.
Um, Before we wrap up here, can you tell me how this helps you? Not just by sounding the alarm if something's wrong. I mean, obviously that's a huge benefit, so you don't go out of business. But tell me a little bit about how this helps you um, with your clients, from an investment standpoint, from a profit standpoint, from them, from a like maybe we talk about some things to help grow the business. So tell me a little bit about how this helps you help your clients.
Yeah, most definitely. So from that perspective, I guess it's worthwhile to say that I'm a financial planner, right? I work with business owners. Largely, I'm helping them on issues like tax planning, helping them understand their business financials and business performance, like we're discussing here, planning for retirement as well. So from that perspective, what I could say is I've never seen a client go through a process like this or similar to this, like start taking their business seriously and them not see improvements in their business, which basically means if we look at their business plan, it's going to be married to their personal plan. The better the business does, the better they end up doing personally as well. So, the improvements that they end up making as a result of understanding their reports and taking their business a little bit more seriously is basically more cash flow, right? More money that they could potentially invest. Starting to have conversations over, well, what is this business going to do for you in the future? Are you going to hire a manager and keep it running as a going concern and just treat it as something that produces dividends for you every year? Are you going to sell it? We get to have those conversations in a meaningful way. It allows me to now have the data that I need to basically do a business valuation for them so they can understand what the value of the business is worth today and what they need to do to improve it if they are looking to sell it in the future. So literally, this particular report and this particular service, I think brings like some really great improvement in their overall financial plan to make sure that they're accomplishing the things they want to, right? Because none of us go into business for the sake of going into business. There's something that we were trying to accomplish, and starting this business was a stepping stone in accomplishing that goal. I think this allows us to kind of refocus to that. We don't get stuck in the business, we're working on it, taking it seriously, looking at the data that we need to, and then figuring out how we apply that to our personal life to now accomplish the things that we wanted to accomplish personally in the first place.
Yeah, cool. Yeah, last year, I came to you, I think it was right around this time last year, maybe a little bit earlier, and I was in a real cash crunch. I was looking at all of the bills that I had to pay. I'm looking at what I have in my bank account, and I'm like, look, I don't know. I was like, I don't know if I'm going to go out of business here. I have no
Yeah.
idea. I had a ton of receivables out there, And we had jobs on the board, and we had all of that stuff, but I didn't really know if I was going to be able to dig myself out of that hole, quite frankly.
Yeah,
And that was really what accelerated this. And then the more we worked through it, it was like, okay, you know what, we do have the receivables, we do have the work, we do have all of that stuff. As long as it gets done by X, Y, and Z, here's what you're going to need every month to bring in. And what that helped me do was figure out how I could get with my team, get these jobs built, get them collected, get everything closed out and done, and get that cash in the bank account so that I didn't have to take on any debt as a business owner. And that was
sure.
huge for me. Yeah.
Yeah,
So,
no, most definitely, I see that.
yeah. And which I didn't, we even talked about, doing a line of credit, or, what did we need to do? And I didn't want to do that. I didn't want to take on a line of credit. I didn't want to take on any debt. I didn't want to do any of that. And so we came up with this game plan and we executed it. And now every month we go through it and you're like, look, the business is healthy. Any for concern? No. Cool. Let's look at this and see how much cash I can pull out and what I have to spend it on in investments or profit or whatever. So
For sure.
that's why this is extremely useful for me. And so I really, really appreciate you helping me get here with my financials and with this. And I know that a lot of business owners in the construction industry suffer from the same uh I would say illiteracy as I did. Um and the reality of it is like I don't want to look at that stuff, man. That's to be
Yeah, for
honest.
sure. Yeah, I think that's what it is. It's not illiteracy. You definitely understand everything that's going on, right? It's just a matter of what's your focus, right? People have different personality types, they have different strengths and weaknesses. This stuff energizes me. Marketing does not, managing staff does not. And you have different business owners that just excel in different areas, right?
Yeah.
So with that said, I definitely thank you as well for bringing me along for the journey. I would say the fact that it was a journey, yes, we have a very effective and efficient process that we've developed that we could take pretty much any business and walk them through this process. But as anybody looking at this sees these KPIs on this report, right? This is designed for the business owners that care about these particular measures. There might be other measures that you have in your business that you want to add to that you would find valuable. And we could take the same journey, hopefully not 2 years long, right? But we could take the same journey to develop exactly what it is that is important to you and your business for you to track, right? So
Yeah.
this is customizable. But for those that don't know what they want, they just know that they want better information. We have a very effective process at this point to get you from point A to Z.
Yeah, so we'll wrap this here in a second, but we went through a journey a with a financial she was a financial consultant slash accountant, and you and I went through really looking at what are the key metrics that we should really focus on without having a lot of extraneous stuff out there that might convolute what I'm after. And
Yes.
what I was after was I just need to know how much money I can pull out of the business and if I'm going to go out of business. That was kind of like
Yeah.
what I wanted to
Yeah.
do. But we also figured out there were things that we could like pulling out job types and the profitability on job types and seeing do we want to continue to still do those types of jobs, or can we sell them in a way that's more profitable? Time on schedule, right, which is going to affect your cash flow. Like, but based on the type of projects, what is our average time before when we sell the job, before we build the job, and then when we get paid on the job? We can track all that stuff, and we know we have the mechanisms to track all that stuff. And if we started to get into a cash crunch, that's where for me that data would become useful, because we'll figure out what we want to spend our time, attention, and money on.
Yeah.
And those are going to be the things that bring in the quickest and most revenue to the company.
Yeah, for
So
sure.
yeah, so I think this whole exercise was really helpful for me to understand the financial side of my business.
Yeah, for sure. I agree. Yeah.
Yeah, cool. Hey, how can people get a hold of you if they want to talk with you, maybe see if you can help them with their business? How can they get a hold of you?
Yeah, most definitely. So the easiest way to reach me, go to bostonintegrity.com. That scheduling button there is not for show. Click on it. You'll view my availability and schedule an appointment. It's a free consultation. Generally speaking, I'll do two free consultations, right? The first one is just a quick discussion meeting, understand what it is that you're after, what you're not getting, what you've tried, and how I might be able to help. You will leave that meeting with a little bit of homework, which is going to be just getting me back some basic information. And on the second meeting, after I've gotten a chance to review that, I could come up with a plan of action over exactly how I would help, what we would do going forward, and exactly what a proposal for services would look like for us to work together towards your goals. So yeah, click that scheduling button and we'll work it out from there.
I appreciate you, man. Again, I always say this, you've been one of the most valuable people to help me in my business, and I appreciate that. Yeah, and I'm sure we'll be talking soon, man.
Yeah, for sure. Thanks for the kind words, man. I appreciate it. The journey was lovely for me as well. So I appreciate you bringing me
Oh,
along.
we're not done, man. We're not done.
Cool. Sounds good.
I'll talk to you, man.
All right. See
See
ya.
ya.
Bye.